Hey, so if you just stumbled across my channel, well, I'm glad you found it. What I'm trying to do here is explain that investing in the stock market is a lot more than just buying a company you love and thinking it's going to go to the moon. There are a lot of people who are going to get crushed by this mentality, and I'm trying to avoid it. Maybe you're a little concerned that something doesn't feel right in the world around Bitcoin or Tesla. Well, you're not alone. My strategy is to look at an investment based on its financials and do a deep dive into the company once I'm happy with those fundamentals, just like we would if we wanted to buy an entire company and run it ourselves. And today I'm going to do a deep dive into the assets under Naspers and Prosus, not just the Tencent asset that they hold, but all of the other stuff that they have. So let me take you over to my computer and let's go through this together to see whether you think that some of the assets that Naspers and Prosus have are actually very valuable. Okay, so the first thing I want to do is have a look at how many companies both Naspers and Prosus have sort of under their wings here at the moment. So we've got, they've got classifieds, they've got payments in fintech, they've got food delivery categories, e-tail, Edtech, which is education online kind of stuff, and just other ventures. They're social and internet platforms. That's where we got Tencent and mail.ru. So they're already public companies. So a lot of these others are not public. And yeah, they're the ones that we're going to have a look at today. So let's jump in and talk about the classifieds section first. So this is mostly the revenue here is coming from OLX. I don't know whether you're familiar with OLX. I'm in Ukraine at the moment. OLX is very popular here. It's actually one of the, I think it's the biggest, I think it might be one of the biggest, top three anyway, in Poland, Brazil, and a lot of Europe uses OLX, but Poland and Brazil in particular. Now, the revenue growth was 25% for the past 12 months, so it's very strong. They did 1.6 billion in revenue, but the profit was only 9 million. So 1.6 billion in revenue, 9 million in profit. That's pretty much no profit whatsoever in comparison to that revenue. So the margins are terrible. We've got out of Naspers, Prosus doing 29.6 billion in revenue for 2021. The classifieds part make up 5% of their revenue. That's including the Tencent revenue, the dividends from Tencent as well. Okay, then we look at food delivery. Food deliveries are, well, it's growing exceptionally well. 98% year-on-year growth. They did 1.5 billion in revenue, but it's loss-making at the moment. I know the CEO, Bob Van Dijk, has talked about this being a massive opportunity once consolidation happens. And look, I don't know much about this business. I just know that it's got very low margins and it's very low barrier to entries into this business. It's not that difficult for companies to set up these food delivery services. I think every country has them already now. They were quick to roll out. So anyway, out of the revenue for Naspers, food delivery makes up about 5% of that as well. Okay, the payments or fintech side of their business, the revenue growth was also very strong at 35%. It's also loss-making though, so they did a little over 500 million in revenue, but the loss was about 68 million. It makes up about 2%. Sorry, I've written the word classifieds here, but I'm talking about payments and fintech. So it's PayU and Wibmo, which is the Indian payment gateway system. Okay, online retailers. This is quite a lot bigger than I was expecting. This is a e-commerce platform in Romania in particular is the big one here. It's called eMAG. The revenue growth was 65%. Oh, there's some big growth numbers here. 2.2 billion in revenue, and it was profitable, making about 100 million in profit. That's not too bad. So a solid business, geographically limited as Europe has a lot of e-commerce players. This is in Romania of all places. But it does make up 7% of their total revenue, which is very interesting. That's a very good business. Okay, some of the other stuff they have. So they got Udemy, Stack Overflow, Code Academy, SimilarWeb. I'm very familiar with a lot of these websites. SimilarWeb in particular, I've used a lot in the past. So this revenue growth here has been relatively flat. So 7% revenue growth. These are also loss-making. They've only just acquired Stack Overflow, and some of the stuff they're still trying to just build up their user base and things like that. So I can imagine a lot of these businesses are loss-making for that reason. It only makes about 1% of their revenue. When we do look at mail.ru, so this is essentially started off as Gmail for Russia. The revenue growth has actually declined 10%. It is profitable, 78 million out of the 370 million in revenue, so that's a higher margin business significantly, but the growth is declining, which is a bit of a problem. It's making up about 1% of their revenue at the moment. Then we come to the big daddy, so Tencent. The revenue growth of Tencent was 32% for the year. It's generating for Naspers 22.2 billion in revenue, so it's giving them a $7.1 billion profit per year. Wow, that's a fantastic asset to have. Again, very high margin business here. That's what, nearly 30% in margins. And look, if you know me at all, you know that I love Tencent. It's probably one of my favorite companies. I love some of the assets that they hold. I love their management team. I'm very bullish on Tencent as a whole. And Tencent makes up for Naspers about 75% of their revenue is Tencent related. Look, I'm fine with that. I don't care that they have so much exposure to Tencent because I think Tencent is fantastic. Okay, let me go through some of those sections one by one and talk about my opinions on these areas. So food delivery. So we got iFood in Brazil, Delivery Hero, which is a global food delivery service. They own parts of these companies, not entire pieces of these companies, but parts of them. So they've been really acting as like a VC firm. Now, look, food delivery is their fastest growing segment at 95%. I just think it's a very difficult business to be part of, and I don't think there's much chance of success here. I don't know how they're going to become profitable just because the numbers just don't really look very good. Like, it's so inefficient having a person spend 20, 30 minutes driving, taking their scooter, there's fuel in that scooter, there's maintenance of that scooter, picking up food that costs, $5-10 sometimes. I'm in Ukraine. Some of my meals cost me like $7 or something, and I'm getting it delivered. I'm like, that makes no sense. The margins in this business are awful. I don't know how they're going to consult how this is going to go in the future, but it's very popular. So maybe drones, I don't know where this is going, but I think the chances of these being a big winner is very low. That's just my opinion. The classified section. Look, this is a stable business, and I like network effect businesses, and they have pretty strong competitive advantages because so many people are trying to sell stuff on OLX. A lot of people are trying to buy stuff on OLX. It has that reputation of where you can buy and sell stuff. So it's hard for somebody else to come in when they have already millions and millions of users using and engaging with this platform every day. It's growing reasonably well. It has been slowing down for the last few years, but it's still growing. And I think margins hopefully can be increased in the future. Maybe there's probably a lot more work they can do with like internal advertising, so people paying to promote their products, things like that. There's probably more work they can do there. At least it's profitable at the moment. Now, the chances of this being a massive home run like Tencent is very low. I would say not going to happen, but I think it's better than the food delivery. So it's probably not a bad business to be in. I don't think they should sell it. Maybe they could spin it off and IPO it or something like that. That would be a great way to unlock some money there. But again, don't think this is a big deal. The payments and fintech side of their business. So PayU, that's a global payment provider in emerging markets, and I think that's I like this industry. It is competitive. It's hard to be the best. But these guys are growing really well. 35% growth in this area is fantastic. And margins are going to improve once they hit as they scale up. I think as you get more, I think in these businesses, as you acquire more customers, the acquisition cost of these customers gets cheaper. So margins do get better. I don't know if this is going to be a massive thing or anything like that. I think it's got more potential than the other businesses. But the chances, because of the competition in this industry, the chances of them being this big winner is probably still low. But I do like this a little bit. I like this industry a bit better, just personally. Okay, some of their other stuff. Now, these are the areas that I do like. So I think online education platforms are great margin businesses. They have longevity. They have great network effect great network effect competitive advantages. Now, 2021 wasn't a strong growth year for this area, so that is a little bit concerning, but there are some really good businesses here, and there's a lot of potential. I think the chances of any of these being a massive big winner is still low, but I do like these. This in the fintech space is interesting for me. So my overall opinion so far is, look, They're obviously the best growth and the best profit margin business that they have is still Tencent. If Naspers or Prosus sells any of their Tencent stake and invests into other parts of the business, I can understand why it's seen as value destruction. Those other businesses are not profitable. So it's taking money away from the profiting Tencent, which is an amazing business, into these areas that are not profitable yet, trying to hope that they grow into something very profitable, more profitable than Tencent. Oh, that's a big risk that they're taking. And at the moment, it is value destruction. But a lot of these business ventures are in the early stages and they do need some time to mature. They don't have to be right on all of them. And even just a couple of them that do really well and they spin them off an IPO, it's going to make a big difference. Now, I think that payment fintech space, the online education and the tech services space, they're the best chances of success in my opinion. They're probably the most attractive ones in my eyes. But maybe I'm wrong and maybe food delivery is the best and that's what's growing the fastest. Look, if there's a way to turn this profitable and look, maybe this is going to be the huge home run. It seems unlikely at the moment, but hey, I don't know what the future holds. I think in 5 years' time, the outlook for all of these businesses are going to be far, far different. And that's exciting. And I think that really just gives us, it kind of gives us a bit of just upside potential here. I think it's a really good opportunity to invest in a company that has this amazing asset in Tencent and potential winners, even if the chances are low, we don't have to hit all of them anyway. So look, it probably is 0% chance of finding anything close to as good as Tencent, but even if the businesses get to say 50% revenue generated and Tencent is 50% of their revenue and 50% in all their other businesses, that will make a big difference in the valuation of this company because they'll be far more diversified now. They're not relying just on Tencent. They'll have all these other revenue streams coming in and that will be far more valuable. So as long as Naspers doesn't get too aggressive in these other areas, so I don't want to see lots of debt and I don't want to see any more of that Tencent stake sold. I really just want to see these companies that I've mentioned today just start to get some profitability going and keep growing and not needing to sell that 10-cent stake to fund these activities. I hope they can fund themselves with the revenue that they're generating. So that's my opinion. That's my deep dive into the individual parts of the Naspers Prosus company that is not really Tencent. I could go into detail about every specific one of these businesses and really understand them in detail, but I think just taking a look at their revenue growth, their margins, things like that, in those, and just seeing their profitability. I think that's really what we need to do at the moment. And yeah, the 10-cent stake is what I'm most excited about this investment. If you want to see my other videos on Naspers, Prosus, Tencent, this relationship, why I personally have invested in Naspers, and why I really love Tencent, please check out my previous videos. That will hopefully give you a lot more understanding of what's actually going on here. Yes, I know it's a complicated subject, but once you do get your head around it, I think there is a lot of opportunity here, and I've hopefully been able to explain that as clearly as I can. So I hope you enjoyed this video, and if you did, please hit the like button for me so I can get some feedback on whether this was a good or a bad video. The likes do help the video spread to more people who might be interested. The brokerage accounts that I use to buy my investments are Interactive Brokers and Saxo Bank. Now I have links in the description. These are the safest two brokerage accounts that I personally use. Look, don't get sucked into those free trading apps like Robinhood. Those don't give you access to international markets either. Now my links are affiliate links, so if you want to support my channel, that's the best way to do it. And please also remember that this is all just my thoughts, and I'm sure I have plenty of biased opinions, so please take responsibility for your own decisions. I'm not going to ask for a cut of your profits, so don't blame me if you lose money. Thanks for staying to the end, and I'll see you in the next video.